This is Rod Kusanen, Spooman for Risk on Friday, June 3rd, 2011. All times on the chart are Central Standard Time. Today's video is primarily for our traders, and we're going to be discussing about the volume indicator and a few additional observations that we've made regarding this that may come in very handy when you are manually trading. And I speak of manually trading because the principles that we're going to be discussing here have not been incorporated into the strategy. The strategy, as it looks at the volume indicator, sees several characteristics that help the strategy to know what to do. For example, it's already been programmed into the strategy that if we look at this subgraph here, this lowest subgraph, we'll use this as an example. If the color of the bars are red, we're poised to go short if the red bars are below zero. If the bars are green above zero, such as in here, we're poised to go long. Okay? If we're crossing, like right in here, if we're crossing the zero line and we have a setup for short, let's use a better example. All right, we're below zero in here, so that would be a short. You could take a short right in here. Green above, we could take a long, for example, right in here, using the 1 tick, or pardon me, the 100 tick. Another long trade like right in here. Another long trade right in here, and so on. So we've already got that into the strategy. But what we're going to talk about now is when the color of the bars are white and what this may suggest regarding the movement of the market. Now, in the simplest way I can put it, if the bars are white below zero, the market will go down. If they're white above zero, they will go up. Right in here, okay? And depending upon how the market is responding at the time this occurs, you can really take some nice, quick, profitable, high predictability trades. But you're going to have to do it manually. So let's take a look. We're below the zero line right in here. And as we can see on other indicators, we're starting to move down. For example, the Z-score on the 300 is overbought. We could look for a trigger to take the market down. All right, so right in here, for example, shorting the market. Not going to give you a lot of points in here, but it's going to give you some high probability scalps. Now, in some cases, it's going to get really good. But there would be a good opportunity to short the market just based upon the evidence shown here by the white bars. Now here, we're above the zero line. The bars turn white, indicates the market will go back up. All right, so you look for a crossover. You got it right here, and up you go. Wonderful trade. Here you have it again. All right, right in here. Look for the market crossover right in here on the 100 or on the 300. Up you go. Boom. Beautiful. Market dropped right in here. Don't let that fake you out. It's going back up. So boom, you get in. Okay? You get in. Now take a look at how this proceeds in here. All right? Market is dropping in here. Okay? Market is dropping. But it's temporary. It's temporary. It's going to go back up, according to the rule. So we look for an opportunity to take a long trade. Here's a crossover on the 100. Here's a crossover on the 300, and sure enough, market goes up. So despite the fact that this 3 tick is already beginning to move down, the bars are red. Okay, lower probability trade here, but nevertheless it still works. Now here we're already overbought. We have a temporary move here back up, and we don't get much out of it. Little wonder we're already overbought there, but it did move up, at least temporarily. Now let's take this a little further out. Right in here, okay, market moved up. We don't have much until here. Have a little bit of a dip right in here. Look for a crossover, take the market up. Nice. Here we're already overbought. Okay, we're already overbought. So the market does attempt kind of a move there, but there's really nowhere for it to go. Same in here. Okay, doesn't really have much to work with. Now here we're below the market. So now we're going to look for the market. We're going to look for a short. Okay, so we shorted up in here, market comes right back down. Nice. Now right in here, okay, right in there, market doesn't really go anywhere under the circumstances. Over here for just a moment it did come back down, and it does come down later on. It does come down later on. And let's back up here for just a minute, because while we said that right in here there wasn't much for the market to do, it comes back down. But if we were to draw this as a projection of where the market is to return to with this cyan colored line, sure enough, that is exactly what happens. Same applies over here, right? We're way up here, okay? So I draw this horizontal line, and sure enough, later on, market comes right back up. So there's some predictive value to this. Again, right in here. We extend this out. Oops. Okay, the market shorted there. Let me come back. Right in here. The market does not come back in here. So it fools us. Now we're below the zero line. Moves up, comes back down. Let me get rid of these horizontal lines. In here, market comes up, comes right back down. There we have it again. We're at a low, but we're below zero. Market comes up, comes right back down. And you've got the same thing in here. All right? Right in there as well. Market comes down. Okay? We don't really have anything else using that particular data feed. But the principle applies, even if you're using a 300 tick or a 500 tick on the ES. Take the same approach. Take a look at this. Okay, once again, the principle would be if the white lines are below zero, all right, the market will come back down. If they're white above zero, it will go back up. It is reasonably consistent enough to put some confidence in. Let me just grab another day. We'll just grab a day out of the blue here and show you how this works. Okay, now all I've done is just taken the standard volume indicator, and I've got 5 weeks worth of data, and I'm just going to fly it over to some spot on the chart. All right, need a little bit more data to look at this. Okay, let's try that again. Okay, so let's take a look at this particular day. All right. So we've got a white bar right here. Okay, what happens? Market goes up, comes right back down. A white bar right there. Okay, now that's an interesting bar, because that looks like it's got some predictive value. What happens? Wow, all right, it misses. It misses. Let's look at another example. Right in here, does come down. Right in here, does continue to go up. That's the after hours market. Right in here, she comes down. Right in here, comes back down. Right in here, comes back down. Here, goes back up. Comes back down. Probably comes back down. All right, support. Down she goes. Continues to go up. Comes back down. Comes back down again. Here. Goes up. Comes down. Comes down. Comes down. So you can see the point that I'm trying to make here. Yeah, there's a nice example. White bar here, we're at a high, goes back up, down, probably some predictive value there. That doesn't quite work, but you can see that, yeah, it doesn't really quite work on that occasion. All right, but overall, reasonably consistent. All right, so the meaning of the white bars, the red bar, or pardon me, the white bars above the yellow, the white bars above the zero line, market's going up, white bars below the zero line, market's coming back down. Highly consistent. But look for a crossover to take the trade. Does it always work? Obviously not, but it's consistent. So that can make a big difference in your profitability. Some very easy trades here. Very easy trades. Boy, I see a nice one right in there. Okay. White bar right here. Well, okay, it came back down. White bar there. Moved up, came right back down. Going up. Okay. So it's consistent, and that's what I like about it. So it's a little bit of a signal bar, all right, and can be very useful to manually trade. I don't know whether we're going to try to incorporate this into the strategy, but you certainly can make use of this concept if you're manually trading and just looking for your crossovers for your entry. It looks like it's got some real potential. I cleaned up today on Friday. I just manually traded. Did very nicely, very, very nicely. Just looking at, well, the overall pattern. And the pattern today was not easy to conclude. Turns out to be a L-to-day pattern down. But these white bars made it very useful information to anticipate what was going to happen. Because here we are at the open, all right, and the market's rallied up into 12 o'clock, which is, and starts to come back down. So you really don't know, is this red up, is it yellow down? Hard to say. But we had some interesting bars, like right there, all right? There was a white bar right here. And then for the market to come back down, well, that's how far down it's got to come. So that's a potential nice short right in here. Nice short. And again, of course, this is a 3-minute bar. We don't usually use that as a trigger. But there's your point. Here's a nice bar, okay? White. We're going back up. We do. It came down, but it went right back up and came down again. There indicates still going lower, so on. Now, it's not the only thing that you can use, but in terms of a bar that might otherwise serve as an ambiguous bar, the fact is it is not ambiguous. And if there's anything that you're getting out of this discussion, that's the point. A white bar is not ambiguous. It means something, and in fact has some predictive value, even when it's followed by bars that indicate that the market is moving contrary to that indication. So for example, right in here, bar was white. Following that bar, okay, the market came down. But temporarily it moved back up. All right? So it did move down, but it came right back up, and then it moved down. So here, white bar indicates we're moving back up. Follow the system. It comes down. Yes, it does. But ultimately, it goes back up. Still going a little higher there. Came down, went right back up. So now you have some additional information to go on with respect to the meaning of the color of the bars. They're all significant. And just to review briefly, we've completed the strategy, and it's taken us a long way. We had some problems in the code. We had some issues. My goodness, wow, it's just taken a long time to get this thing right. But we finally got the code right. We worked through the bugs. So come Monday, we'll be releasing the new ELD for the strategy, and we'll be discussing, after we've got a day or two of data with the strategy completed as it is, we'll do another video to discuss some of the rules that we've incorporated into the strategy. So that's the video for today. This is Rod Kusanen, Spooman for Risk.